Hi everybody, it's Chartsky with a new shorter video showing what we did today, which is April 11th, in the live trading room, and giving some extra comments which I hope you might find helpful. This is the day as a whole. We're going to be taking a look at individual markets, and let's start with gold. We had another great add-on day in the live trading room, but actually we had an add-on day in the gold market all by itself here. It started with the top-down analysis at 8:50 in the morning, and I said there was nothing but blue skies above in the gold market, and also nothing but room below in the S&P. We'll talk about that a little bit more here in a few minutes, but we really capitalized on our pre-market plan in gold. But there was even more available in the gold market to those who have learned to trade longer, and by longer, what I mean is having a longer time horizon. We do scalps in the live trading room. We focus on getting 15, 20 ticks, something like that, and usually those trades are pretty quick. We're in and out. Now with these markets being whippy, sometimes they do take longer, but it's designed to be faster for traders that are new or struggling, have a hard time with their attention span and their focus, because that's something you have to, of course, learn through practice. But in the live trading room, just what you see here in gold could have paid for months of the subscriptions. That first 20 tick trade, then we added a nice 15 tick scalp, and then a third 15 tick scalp, all in gold. And speaking of a longer time horizon, there was, I guess, $1,500 per contract move straight up in gold just from 9 o'clock in the morning. But again, this would have been available based on the pre-market plan that we had, the top-down analysis in gold. Now, with regard to some specifics of gold and the way we traded it today, there were a couple of stealth support and resistance zones, stealth SR zones, and I put these on the charts almost every day. And once you know where they are, once you know how to identify them, put them on your own charts, you'll just be amazed at what the market does when it gets close to them. So let me take that yellow mark off, and then we can add this one. First trade right here was a retracement back to the stealth zone and a bounce. I'm sorry, that wasn't the first trade, that was the second trade. First trade was a breakthrough of the SR level right here for 20 ticks, knowing that we could get into this zone but not expecting more. Then the second trade was a breakout and a retracement. This third trade didn't make it. See, it didn't make it to the stealth zone, and so we took the buy again because we knew from our pre-market plan and the top-down analysis that there was nothing but blue skies above the gold market, and it could really move. And if you know how to put these stealth zones on your chart, let's look at this one right up here. For example, we talked a lot about the one underneath it, the one down here. We talked about that a lot in the trading room, but we didn't discuss this one too much. We just identified it in the trading room. But if you knew about that when price came into it, you could have faded for a pretty safe counter trend trade right there. And then when price showed you that it wasn't going to come down, that it still had some strength into it, you could have bought a breakout of the little stealth zone for a nice trade to the upside. Now it's important to remember that gold is now at its highest level since the November 2016 election. But the S&P hasn't really come down yet. Now, why would gold be at its highest level since the November election? Now, this goes to fundamentals, okay, but you always have to remember the fundamentals of the market, because that kind of sets the foundation for what it can do. Well, there's three things that I've identified just today. The potential problems with North Korea, the active Syrian Russian problems, and French polling data. All of those give rise to perhaps a flight to safety. Gold is a commodity that you can theoretically hold and, I guess, bury in the ground in the backyard if you want to, but it's something that's going to be there, that's going to hold its value in times of uncertainty. And so there's probably been this flight to safety, putting gold at its highest levels since the November election. Now, how high can gold go? Well, it's like I tell folks in the live trading room, a market can go as far until there's no more buyers. As panicky as people get, or the more panicky people get, the higher gold can go. I don't know that I'd be buying it up here. If you wanted a long-term position, you're kind of late to the party getting in up here. But anyway, that's the gold market from today, and it may be in the foreseeable future. So now let's look at the EuroFX market today. And in the EuroFX market, we knew that it would most likely continue up, but we just couldn't wait in the live trading room and hold these trades. We did take two. And besides, we had a great add-on day without having anything in the EuroFX. And the reason we couldn't have waited, or weren't particularly patient to wait, is because you can see that the EuroFX put in a trading range. And it had been in that range since, I guess, around 6 o'clock in the morning. We started about 9, so it had been in about 3 hours by the time we started. And then it stayed in there until close to 11 when it broke out. And anyway, we didn't need it, but we still gave ourselves chances, buying trades with the trend and near the range lows, okay? But it just did move, and we couldn't wait, and we didn't need it. So there's not much more to be said about the EuroFX. So let's look at crude oil. It was even worse than the EuroFX, because as you can see, it was in a really choppy range. And yes, there are stealth SR zones all over the place in crude oil today. They're all over every market. But today in the live trading room, I talked about and called signals based on something else, which I call the line in the sand. And there it is. Now, it's different than basic support and resistance. It's way different than what you can find and read on the free message boards. But once you know it's there, then everything else kind of seems to make a little bit more sense. And specifically what I'm talking about is, here's about 9 o'clock. Okay, it's about when we started trading crude oil right here, and our first trade was a buy at the line in the sand. Price came through a little bit too hard for my taste, and so we scratched the trade. Okay, that's what this is right here. That's a scratch trade. And then we watched and looked and see what price did, and it didn't bounce really good off of that. Matter of fact, it barely got, I guess, 10 ticks up off of that. And so then when it came back through right here, we were sellers, and we only took 10 ticks, okay? But the market really wasn't moving very good. So take what the market's given. And it was given 10 ticks. You know, like I said, barely gotten 10 ticks off of that. And now the trend would be more down on a breakthrough of the line in the sand. So we sold and took 10 ticks. And yes, there was stealth support and resistance, and we talked about specifically 52.70. When we were in this trade, I told people it could get more than 10 ticks, that could get down to 52.70, and sure enough, it got right down to that stealth zone, and it bounced. And so that's crude oil. Let's see, which leaves us with the E-Mini S&P, doesn't it? Okay, we've got a couple of really nice trades in the E-Mini S&P today. And again, like I mentioned a few minutes ago, during the top-down analysis at 850, before we even started taking any trades, I said there was tons of room below the S&P, just like there was blue skies above the gold market. There was tons of room below the S&P for that market to fall, and we really capitalized on our pre-market plan. Oh yeah, I even gave away, by that I mean I passed in this case, on a buy at the 9:30 open, because I was so convinced that the S&P market would fall pretty fast and hard. It made it a little bit too dangerous, but it did bounce right off this solid SR level. Anyway, that was a buy in a market I expected to fall, so I didn't call it for anybody to take. In the S&P, that's right, in the S&P, this is the market where I stress volume, and I teach especially how volume can precede price. In other words, volume can act as a leading indicator. Your moving averages, your stochastics, your RSI, your MACD, CCI, whatever indicator is your favorite indicator, they're all based on price, okay, and what price did at the close of the bar that just closed and however many bars in the past you base your indicator on. So it's always telling you about the past, but it doesn't do a whole lot to tell you about the future. I mean, you have to kind of extrapolate, and that's all well and good. If you know how to use them, you can do that. But volume, I've found, is a lot better leading indicator. And here's a couple examples, and I'm not going to go into them a lot right now, but just remember that volume can act as a leading indicator. Okay. Now, after price moves down a lot, let me get my here. Price had moved down, retraced, and down. Okay. Once it gets into this area down here, you would know to be scalping for smaller moves. It's already done its thing. It's already come down just like we expected at 850, and now the trades that you would be taking, that I would show you how to take, would be trades bouncing off these SR levels and other little small scalps that would be available down there near the lows. So that's it for the S&P market. And that's all four markets. Like I say, this is new little thing. It's supposed to be quicker and shorter and maybe give some more detail into the markets. So if you have any questions or any suggestions or anything you'd like me to do different or better, please let me know. Here's the CFTC disclaimer. It's very important, and I urge you to read it. And if you're interested in joining us, or if you want more information, you can go to my blog at www.chartsky.com, or you can send me an email to chartskytrades@gmail.com. Hopefully these will get a little better and a little smoother, maybe a little quicker. But thanks for watching.